Welcome back to the Money Huddle. In this week's episode, we talk about one of the headlines this week that shared over half of U.S. young adults now live at home with their parents. We talk about student loan debt forgiveness and what that could or could not be or mean for the economy and investing. And as always, we have to say thank you. We're thankful for you. This is Thanksgiving week. We hope you and your families have a wonderful Thanksgiving. Enjoy the show.
Welcome to the Money Huddle, a podcast that discusses financial topics for families, retirees, and small business owners. Hosted by Michael Baker and Ross Marinell. All opinions expressed by Michael and Ross or any podcast guests are solely their own opinions and may not reflect the opinions of Advisory Alpha. The podcast recording is for informational purposes only and should not be relied upon for investment decisions. Clients of Advisory Alpha may maintain positions in securities discussed on the program.
Welcome back to the Money Huddle. My name is Michael Baker, and I'm here with my co-host, Ross Marinell. Ross, how you doing today?
Michael, welcome back. It's Thanksgiving week. How we feeling?
I'm feeling pretty good, man. I'm feeling pretty good. I'm losing the calorie war, though. I'm not gonna lie.
I gave up on that 5 months ago.
We'll
fight the calorie war next year.
I'm fighting the good fight, but I'm losing the calorie war right now. And this week's it's gonna be brutal.
Wait a second. You mean you're not riding your Peloton every day?
I'm trying, man. I'm trying, but I'm telling you, I like eating. I like eating a lot of food, and
like eating's more fun than riding a stationary.
Well, you know what I've learned, man. I'm you know how people say like, oh, I'm not a stressful eater. I've learned I am a stressful eater, man. This year's like, you know what? Just give me the burger and the fries. Push the salad to the side. I need some comfort food.
You figure by next March or April, I'll be able to scoop up a Peloton on the Facebook Marketplace for half price. Don't you think once everyone's given up on their New Year's resolutions come like February, March,
you're thinking
500 Pelotons out there.
You're thinking surely somebody made a hasty Peloton purchase last year. That's not a bad strategy. I hadn't thought of that, but it's not a bad strategy. So I wanted to share with you about a headline. I really did not get to watch hardly any sports this weekend. Saturday was a beautiful day. We got the kids outside, and we pretty much played outside and hung out outside most of the day. And then we took a day trip over the weekend. But I saw this headline, and I had to share this with you because this is a topic. I don't even know what it would be, but this is definitely something we would talk about. So apparently, Baker Mayfield just got the record for the most wins by a quarterback at Cleveland's First Energy Stadium. Do you know who he passed to attain the record?
Okay. McCown?
He passed Ben Roethlisberger for the Pittsburgh Steelers.
Finally, a Cleveland quarterback owns the winning record for their.
That's so sad. Like how bad do you have to be that the quarterback with the most wins in your stadium doesn't even play for your team?
And worse is your biggest rival in football.
Oh my!
Did not know that,
dude.
That's fantastic.
So the craziest thing is, and I haven't even looked. But I wonder, like, does Pittsburgh play Cleveland at Cleveland this year? Because Ben could come back and like try to take the record back. It could be one of them. It could be one of those rivalry games within the rivalry. You know.
Oh, that's fantastic. I needed that laugh today. Well done.
I read that and I thought of, boy, I said, what on earth? Baker Mayfield's finally. I mean, he's finally trying. They're trying to get some respectability.
He's now earning all those commercial spots. He overtake Ben.
Oh my heavens, it's hilarious. All right,
fire away this week. What you got going on?
Well, obviously, I think the big news this week that we could talk about for sure that we've seen playing out in the markets is the announcement. Of course, right after the election, we had the announcement of Pfizer's vaccine. Shortly followed behind them, we had the announcement of Moderna having their vaccine. Both of those seem to be having pretty high efficacy rates, like 90 to 95% effective. Right. And then I think it was today that AstraZeneca has come out and said that their vaccine is showing a 70% effective. But what's interesting and what I'm seeing about AstraZeneca is they're saying that they may have an advantage with that one because of the ability to store it and to make it portable. Because that's the big challenge right now that they're going to have to figure out with these vaccines is not just can we manufacture them, but can we ship them, store them safely, and make them effective and ship them all over the country.
Well, it was great news to hear that the trials are producing results and that they most likely will be fast-tracked. And this has had a lift on the market, of course. I mean, this has been positive news that we've all been hoping for, right? Which is to have some type of vaccination that can return us back to a more normal economy, more normal movement. We're not seeing that this week, right? With all the headlines circulating about stay-at-home orders, and we could dig into that. But honestly, this is what we want to hear, right? Is that there's a pathway forward for our economy and for people to be able to travel again and gather safely. And if this helps us get there, by God, I hope we get all three of these vaccines rolling and more feedback along the way.
I agree. I think this was a huge morale boost for investors, people that were staying the course, and even some of the money that was sitting on the sidelines that might have been looking for that opportunity. After looking at the third quarter data, remember last podcast, I was like, hey, is this recovery real? Yes, it's happening, but there's going to be some things that lag, right? And unemployment is going to lag, but also just the way that different states are handling their own shutdowns and, the lockdown procedures that are being followed. It varies depending on what state you live in, but a vaccine, something that, is highly effective. I think that there's a cohort of people out there, right, that will line up to take this thing like right out of the gate. I don't know if that's going to be me, but there are people that are early adopters in anything that they'll say.
There will be enough participants to know that it works or doesn't work. But I'll tell you what the effect has been. It seems to be with the stock market is a little bit of a seesaw effect. So when we have great headlines with vaccines, we're seeing travel and leisure stocks start to pop. I mean, whether it's airlines or Boeing or any, Las Vegas casinos, whatever, you see kind of rise. Some of the real estate components rise. And then at the same time, on those good vaccine headline days, you're seeing the work from home stocks drop. And it's just this back and forth based on what the headline is for that day. We're seeing this sort of gyration seesaw effect between those kind of movement, travel and leisure, getting out, going back to your normal, kind of experiences versus the work from home. So it's probably going to continue until we hash this out over the next couple of months. But I would expect that same kind of scenario to play out in the stock market.
I agree. I think we're still in a place where there's still some degree of uncertainty. I mean, as of the recording of this podcast, we still haven't actually certified the official way that Joe Biden is going to be president-elect. Now, all things are pointing that is what's going to happen. Mm-hmm. But I mean, we still are seeing, Trump's administration is trying to litigate and do some things. There's some state-specific lawsuits that are happening. So even it just shows you this environment we're in right now is extremely weird. I mean, politically, economically, but there are some things happening. One of the things that I was talking about with a group of friends the other day, and I think it bears repeating, is we still don't know the full effect of this of this pandemic on so many different things. For example, I read just today, there's you wouldn't know this person, but in my world of jiu-jitsu, he is like the one of the gurus. Is a guy named John Danaher, who for years has trained his students up in New York City, and they are moving down to Puerto Rico. And wow. there could be a number of reasons why. I can tell you, having lived in New York City and gone through those winters, and looked at pictures of Puerto Rico, I can see there being a definite desire to do that. But the underlying idea is that the lockdowns in New York City have become so strict that people can't run their business, and so the people that are leaving. And I think we've heard this and we've seen this in talks of like New York and California and some other places. And I wonder like what that looks like, because, people that can move and relocate may be choosing to take this time to do that right now while we're having this period. And I don't think we're going to see the full results of that. Just like I don't know what the work from home situation is going to look like. My neighbor told me he may or may not go back to the office. They're trying to figure that out right now with him. So it's interesting, very interesting.
Right. So something that's emerged from over the last, several weeks has been, if you've been paying attention to the market, especially the S&P 500 over the last several months, several quarters even, a good chunk of the performance has been driven by the FANGs, the powerhouse FANG stocks, right? So FANG, Facebook, Apple, Amazon, Netflix, Google. You could throw Microsoft in there. But basically, the top five of the S&P 500 have been very dominant in the performance of that. And interestingly, though, Michael, what we've seen over the last 3 months, so this was ending last Friday, was that the S&P 500 was up 5.15%, so the prior 3 months. And of those FANG stocks, only Google was positive. Wow. With a 10.21% return over that 3-month period. But Facebook was down a little over 1%. Apple and Amazon both down a little over 5%. Netflix down just under 1%. But we're seeing increases in the S&P 500 without FANG. And we're also seeing a stronger drive in returns of small caps and small cap value and small cap growth. Both having pretty solid double-digit returns. I was looking at tickers VBR and VBK, so that's small value and small growth. Those are Vanguard positions. VBR was up, so that's the value was up 16.5% during that prior 3 months, and the growth of small caps was 13.1. So really solid performance coming from different sectors than just the headline stocks that have kind of driven the last little period here.
It's going to be interesting to see, because I know that one of the sources of heartburn for a lot of diversified investors that, they own a mixed portfolio has been watching the continued outperformance, or I would say really strong performance of U.S. large cap, and trying to, stick to their guns and stick to their investment policy and not deviate and get out over their skis with risk. Because we know, like, obviously, think about somebody who maybe capitulated to say in 2020, this is the year I'm going all in on U.S. large cap. And then we have the pandemic, and they saw their portfolios get whipsawed amazingly. Do you remember, did you block out the limit down days? Limit down, limit up, limit down. Like, it seems like I've forgotten that, but those days were insane earlier this year, where it was like almost every other day. It was like, oh, we're limit down again. What are we going to do?
I know. You wake up to the market being limit down.
It's
just that's how you'd start the day.
And I think, and so what you're pointing out to is, we'll see. I mean, they talk about things reverting to the mean, and then I've heard people saying, oh, the new normal. And one of the things that's very challenging is just for anybody to know, like, we don't know I can't remember who said this quote. Plenty of people have said it. So I'm not going to take credit because it was not me, but I've heard it said many times, like, we don't know what the market is doing. We only know what the market has done. And so, like, we have to continue to try to invest prudently within the context of a plan and with our principles. And like you said, there's been some of these big companies, they have really, driven a lot of growth, and it may be time for them to take a back seat. Maybe for some of these other, other asset classes to step up a little bit.
They have kicked butt for a long time. And this transition is small. I mean, we're talking about 3 months, right? So we'll see how that continues. But, I do think, and I find it intriguing that we're starting to see finally some rotation.
Hey, for day traders, 3 months is like a long-term time horizon.
Well,
right?
you can.
All right. So, but when you bring up that, I would actually wanted to share, something. So I had an interesting experience today. I had the opportunity to go in and just visit with some high school students and talk to them about the world of investing and give a professional's point of view on some of the things. And it's really interesting. First of all, if you haven't gone and spoken to middle school or high school students, I encourage you to do that. One, I really think kids today need to get, no disrespect to teachers, but I think professionals that can come in and say, hey, I do this day to day, and give you a dose of just realistic, talk, discussion, or even Q&A, is so beneficial for kids that are really just trying to read and learn concepts from a book. But being able to have somebody that deals with it in real time. And so it was interesting because they just looked at me like a deer in the headlights for about an hour. And, I was like, Bueller, anyone?
You hit him with finance for an hour?
55 minutes. Yeah. So it was a fun time. We laughed. They laughed at like two of my jokes.
Okay.
But I realized I'm not as cool as I thought I was. Like, I thought I could communicate on a cool. I'm not there. I'm in dad land. That's right. Period.
I've converted you.
But anyway, one of the things we talked about, we talked about the importance of a plan. We talked about, the importance of controlling your emotions and how a plan can help you do that. And in the spirit of preparing for the class, I'm kind of going through some of the classic stuff that you and I have read over the years and books that we have and have highlighted. And I pulled out Nick Murray's Simple Wealth, Inevitable Wealth book that I've read a couple times now. And I was going back through and I highlighted this one section when I was talking to them about fear. And I said, fear has a greater grasp on human action than does the impressive weight of historical evidence. And so what Nick Murray is actually quoting Dr. Jeremy Siegel from his book, Stocks from the Long Run. So it's like a double quote there, but it's so good. Fear has a greater grasp on human action than does the impressive weight of historical evidence. And, we're seeing that is specifically when we talk about investing. But if you want to just simply apply it to this pandemic, look at what people, and I'm not saying it's right or wrong, but I'm just saying, look at people's fearfulness of the virus and how different people have responded in different ways to it, and I would liken that just to investing. When we have things going on in the markets and the markets are being volatile, the fear of what may happen or the fear of the unknown or the uncertainty, different people are going to react differently to that too. And a lot of people are going to, respond and overreact to the extremes, which is why I think it's so important. And this is what I put to my class today when I talked with them. I said, we have a plan first philosophy. So we have a planning first philosophy. I said, because there are going to be times that test you. I said, and there's no time you don't want to be making financial decisions when you are stressed out, when you are emotional or dealing with a crisis. I was like, that's the last time you want to be faced with having to make financial decisions, but you have to. But if you have a plan can help guide you and give you a good framework to work with in making those decisions. So hopefully they took that away from the class. I can't say that they did, but I hope they did.
Now you need to do that like 50,000 more times.
We'll see, man. Hey, what's that story with the starfish? Hey, don't know if I helped off. It made a difference to that one. I'm gonna pick one up, throw that one back in the ocean. Make that. But that was a fun thing today that I got to do, and hopefully I get a chance to do more of that.
I taught a class like that, but I did it for first graders last year. I did feel cool then.
You were amazing.
First grade. They're excited. We got our little marketplace map out. We're driving around the little fake car around all the different marketplaces and buying stuff and using money. It was great. Actually, first graders are very, very smart about how a business operates in money. And you should never underestimate what kids learn and grasp from our conversations around the house, because they pick up things very, very quickly.
All the time.
Tell me, what else you got on your mind today, Michael?
Well, so I had one other story that I looked at over the weekend, and I actually was one of those ones that I saved because I wanted to go read it because the headline really grabbed my attention. And the headline was, this was from Visual Capitalist, and it said, over half of U.S. young adults now live with their parents. And I thought, that's interesting. So I saved it. And basically what it says, for the first time in the last 120 years, the majority of young adults ages 18 to 29 are now living with their parents. And I really don't know how I feel about that.
Wow. Man, when I left for college, I never lived at home again, other than during the summers, come back for summer for 2-3 months or whatever. And that was I think that was pretty normal. That was just kind of the opportunity. Now, the difference is, and maybe the difference is just simply when I graduated college from Indiana University, I had a job opportunity. Mm-hmm. And that job opportunity took me to a different, state. And from that point on, you're working, and I never returned, to live at home. Now, if you're graduating college and there's not a job opportunity out there, there's only so many places to go where you can afford to live. And especially now, given the massive changes we've had to our service industry, where let's be honest, if you're graduating from college and you can't find a job in your preferred career path, then what do? Right? Maybe you work at a restaurant, maybe you work at a bar, maybe, you're in the service industry just to create a paycheck. And if that has been effectively shut down by our COVID restrictions, what do? You got to live somewhere. That kind of goes hand in hand with one of the things that's been circulating since, like you mentioned before, it looks like Joe Biden will most likely become president. One of the ideas that already was floated around was, we're going to wipe away $50,000 of student loan debt for any individual. And it's an idea that has gotten some scrutiny, and people are pretty passionate about it because there's a lot of folks out there that have saved hard, worked through college, and paid off student loan debt, or they chose not to go to expensive schools to take a different, maybe a lower cost path. And so this is all kind of coming together, right? Because the opportunities are diminished. Mm-hmm. And the debt is higher than it's ever been, right? It's more expensive to go to school, but we're also having fewer and fewer opportunities for people. It's a situation that needs to be addressed somehow. I don't know that just clearing the slate of $50,000 for student loans is the correct answer, but there are so many opportunities there to fine tune that system and make it better. That it's, if you dig into the college loan funding process and you really look, if just unbiased look at it, it is a mess. And there are so many ways to fix it without just going in there and wiping the slate clean, because that doesn't really fix the problem. It'll just continue again, and then we'll do it 10 years from now or 20 years from now.
Well, you hit the nail on the head. To me, it's, are we treating the symptom or are we treating the disease? And I think that you have to look at what circumstances are present that have allowed student loans to just proliferate the way that they have. And, this amount of debt and borrowing. And, part of it, quite frankly, I look at like anything else. Student loans are like the one debt that you can't discharge in a bankruptcy. So in one way, it's like you become if you have a student loan, you're like an indentured servant. Like you can't get rid of that thing no matter what. And what is the economic drain on you for doing that. And now I know that raises all kinds of questions about, well, how do you determine, what to let people borrow? But I'm thinking on the flip side of that. If I'm an institution and I know that people will borrow to come to my school and they can't get out of the debt no matter what, I mean, they're just held hostage with you raising tuition and doing other things. But, in looking at this, I understand both sides of the argument. I'm not educated enough on what was proposed at the current moment to have an opinion other than I think something like that is going to create massive resentment. That's just my emotional gut feeling on that, because I think about the number of people that have gone through, they needed student loans, they worked, they saved, they grit their teeth, they paid that thing off. And now you have people that are, because let's just call it what it is, because of the way that the political winds are blowing, they're going to possibly be given, debt forgiveness on this money. And what, maybe it'll be the greatest thing since sliced bread. I know the economic argument is, hey, if we forgive these loans, then we're freeing up cash flow for these kids to become consumers and to go in and do it and make other purchases. I mean, that's going to be the economic argument for it. Maybe it'll work out that way. I think you are right though, in the sense, if we don't look at what caused the loans to get so out of control, where we have people taking on loans that they can't repay or they can't repay in a timely fashion, then this is only going to be something that we circle back around to years from now, and we're right back in the same boat.
Yeah. And so some of the ideas I had around it were, there was a really good podcast series Michael Lewis did. I listened to that. It was probably a year ago. So Michael Lewis, author of Moneyball, and
right.
He's written some great books, and he really honed in on this idea of student loan forgiveness, right? Because there is a pathway to borrow student loan debt that can be forgiven if you go into a particular field like teaching. And this was a headline from Forbes. It said 99% of borrowers rejected again for student loan forgiveness. So people that are trying to follow the pathway to have their loans forgiven, and they have even obtained those loans 10 years ago under the presumption that they would be forgiven, are seeing their applications rejected at an enormously high rate. So you might say, well, how do we fix some of these problems? I'm like, well, there's a great one. If you're promising to forgive people's loans and then you're denying them, then fix it. That's a huge area where we could alleviate, how much debt from teachers that are expecting it to be forgiven. Like
I think that's a great, like you were saying, I think that's a great point to make, is that we have loan forgiveness programs in place and they are not working the way that they are telling people.
Right.
They're saying, hey, if you go into education, which we can talk about teachers being, underpaid or not paid enough, whatever, but you go into it and you have loans, there's a path for you to have those loans forgiven. But we're finding out that, lo and behold, they're not getting their loans forgiven.
Right. Now, I was looking at current federal direct loan rates have come down. That now looks like a direct unsubsidized loan. Well, it's around 2.75% for undergraduate borrowers. That's a significant improvement over where it was even a year or two ago. So student loan interest in the past, I'm looking at this chart. So the 1920 school year was the direct loan was 4.53%. The year prior, right, the 2018-2019 school year, it was over 5.
Right.
But that's just the federal direct loan. If you look at the PLUS loan, which is the cosign loan between the student and the parent, it was over 7%.
Yeah.
Now, can we not do a better job? Now, of course, what does that mean? Well, the lower rate loan, the federal direct loan, you can't borrow the full cost of attendance on that, right? You're capped every year. But what can you borrow the full cost of attendance on? The PLUS loan, where we pull the parent in and we say, okay, student and parent, you're both on this loan obligation, and we're going to charge you over 7% interest. That's an area we could do better than that. People are getting 30-year mortgages below 3%. I know we can do better than that. And I realize the argument for that would be, well, with a home loan, there's a real estate asset, there's a physical asset. But I'm like, look, we can make some adjustments there. Like, there's ways to fix this system without just, just spending $1 trillion.
Well, I mean, with a home, yes. I mean, you can ultimately lose your house, but you file a bankruptcy, you lose your house, whatever, you could recover. Like you'll have to rebuild. But a student loan, like, okay, you're unemployed. Okay, you go into deferment. It doesn't like go away. Like they just sit there. They're like a pack of wolves. They're like, all right, well, we'll just wait on you to start working again. And to me, like that's the most insane part of it is I can't think of another debt that you can incur where, I mean, and let's be honest, unfortunate things happen. It's not always that you can't pay your bills because like you're irresponsible or you're lazy. I mean, sometimes people get sick. Sometimes people have unexpected life events happen. Sometimes, you name it. There are things that can happen that totally disorient you from the track that you were on. And, you have to deal with some rough times financially, but student loans, man, it doesn't matter. Like you're stuck with those things. Right. And to me, it's like, I'm like, well, okay, if we're going to create a loan where you can't discharge it, why on God's green earth are we letting loan shark interest rates being part of that equation?
And that's not even the worst, right? Because the private student loans can be in double digits. And people listening may not know that. Like we have literally looked at loans borrowed for college over 10%. And it just didn't feel, I mean, that's a sinking feeling in your stomach when you look at that and see that on a piece of paper and go, how is this still happening today? This should not happen. And I guess my point is I am as much of a proponent as anyone that we need to fix the college loan problem, because I don't want our young Americans saddled with $100,000 in debt and feeling like there's no alternative.
Well, we're seeing what's happening because the two reasons it's giving here for the failure to launch article from Visual Capitalist, the two reasons it's giving is saying number one is they're the most educated generation in history, but they have a lackluster job market. And number two is tying the knot later. People are getting married later in life, and obviously when you have two incomes, it's a little easier to have live independently of your parents' home. But what I look at that though is, and this is, probably the B side of the issue. I mean, I'm not wanting to tell somebody, hey, don't go and pursue that path if that's what you're really passionate about. But I think we have to have some realistic conversations about education again, and understanding that there are some career paths. There are some colleges have created these majors where the kids, they have a diploma, but there isn't going to be a huge demand for the skills that they're coming out with. And they have this debt and then they can't figure out why they can't go find a job, or they find a job, but the job they get is entry level, and the maximum salary. I mean, we need to start educating kids about, this is my thing. This is my sticking one. College needs to be a business decision. There, I said it. That's what I think about college from now on. That's how I'm going to teach my kids. My wife will teach them, hey, we want to have a good college experience. And I'm like, yes, we do. But college is a business decision. It's like, it is this period of time in your life. I said that you get to practice what it's like being independent. I said, but when you leave, you need to be prepared to go out and begin contributing to the workforce.
So I follow Eddie Elfenbein on Twitter. He said, if you borrow money and don't pay it back, then it's not borrowing.
No, it's not. And that's what I said, back what I said on the original thing, it's going to create a ton of resentment because, we've kind of backed our way into this quasi modern monetary theory working of how we're doing the government checkbook right now. And, all of this spending, generally is looked at as investing. You hear that's the nomenclature that the government uses. We need to invest in this. We need to invest in that. Well, investing requires a return on investment. And so, I mean, we'll see what happens if they put things out and they are able to, forgive this, forgive these student loans, and these kids are able to take this money and, go buy homes, invest, do things that, begin consuming. That could be a boost for the economy. But if they don't address the root cause of the issue, we're going to be having this conversation, over and over and over again.
And yes, I agree. And it's hard to fix the problems by going through line by line and making the updates. And it's very easy to say, we'll just pay for it. So sometimes we got to take the hard road and actually fix the problem.
I agree with that.
Well, buddy, it's Thanksgiving
Turkey
week. It feels weird. Turkey week. It's amazing here in the Carolinas because it feels like spring.
Hey, man, I'm counting my blessings. I was getting ready to ask you if you had any big Thanksgiving plans, but I wouldn't want you to go on record right now, with all the restrictions that they're asking us to do. But it's hopefully everyone that's listening that you will have a wonderful Thanksgiving. We're thankful for you. We're thankful for just the opportunity to get out and do a fun podcast and talk about ideas and kick it around. If you got anything you want to share with us, any topics you want us to talk about, feel free to email us. You can email us at themoneyhuddle@bcplanning.com. And as always, thank you for listening. We'll talk to you next time.